I think that that's a bearish prediction for Bitcoin going forward. I think like if Bitcoin is $3 million by the year 2050, that's a compound annual growth rate of like, I think still less than 20%. If you just look at like Saylor's Bitcoin 24 model, like he's kind of projecting like 30 something percent at least compound annual growth rate for his base case, which I think is kind of more in line. I think it's extremely early for Bitcoin. I think like the one way to think about Bitcoin, and I wrote about this in a report titled Your Wealth is Melting that I published earlier this year. The way that I think about Bitcoin is just this one asset where no matter how much time, energy, or resources are poured into creating more Bitcoin, you're not going to be able to create more of it. It's the only perfectly scarce monetary asset that humans have ever discovered. And, you know, you can say that. I don't think people quite realize like what the implications of that really are. Like we have $900 trillion roughly worth of wealth in today's world, whether that's stored in gold, real estate, bonds, or other asset classes, cash. And all of those assets, if humans spend more time or resources trying to produce them, we are going to be able to produce them. And the example of real estate, it's $300 trillion worth of wealth are stored in real estate. Effectively, that's a massive bounty on encouraging other people to go out there and build more houses, build more apartment complexes, even build more land. Like there's an artificial island off the coast of Dubai that's home to thousands and thousands of residents. Like we can literally create more land if enough wealth is stored in land. That we can't do that with Bitcoin. So we have this $900 trillion pie that if we do keep $900 trillion worth of wealth in these various asset classes, all we're going to be able to do is continue creating more of it. And that's exactly what's happening. Like we create more real estate, we mine more gold. We, you know, if you store $3 trillion worth of wealth in NVIDIA, VCs are going to fund other chip startups to go and compete with NVIDIA and take away their future free cash flows. And so it's like, we're trying to store all of this wealth in things that shouldn't really hold wealth. And over the long run, they like can't hold wealth as long as humanity continues to be prosperous and grow, and we're able to produce more and more. And then Bitcoin is just this one unique, highly unique monetary asset that no matter how much time, energy, or resources, we're not going to be able to create more of it. And so it's like, if you assume that technological progress continues at the rate that it's been going for the last century, we're going to be able to create so much more abundance in terms of everything else except for Bitcoin. And Bitcoin is kind of like the way that we're going to able to actually preserve all of this wealth that we've tried to preserve in these like old traditional asset classes that aren't really built for preserving wealth without dilution or without leakage. And that's kind of the title of the report is like, if you store wealth outside of Bitcoin, your wealth is melting. Like we're creating more real estate, we're creating more gold, we're building companies that compete with NVIDIA and Apple and Amazon and Microsoft. With Bitcoin, your wealth is not melting. There's only going to be 21 million Bitcoin. And as long as you assume that humanity continues to progress and get more advanced, which I expect, and I think that should be the base case, unless we go into some sort of like crazy apocalypse, which at that point doesn't really matter what you have. I think Bitcoin will be the winner as long as you assume that humanity continues to become more and more prosperous over time.
Bitcoin can go so high because you just laid it out perfectly. That's what made me think of it, where it's capped. Humans have never experienced it, and maybe that's why we have a hard time, because our brains have to flip. It's counterintuitive, and we've never had to think that way. So it's just very, very tough. Or maybe it's as simple as maybe even this. Like, how do you explain to people prices made at the margin, right? Like I think that's a thing that most people just don't even know. Whether it's real estate or Bitcoin, prices are determined in the margin because it's just what people are willing to sell it for, because not everyone's willing to sell at a given time, right? So how do you kind of see those things, and how do you talk to people about them when it's at a lay level?
Yeah, it's a good question. I mean, like one thing that I've been saying is like Bitcoin is at the very least the equivalent of gold. And the market cap of gold is roughly just shy of $20 trillion, I believe. And then if Bitcoin hits that market cap, it's just shy of $1 million right now. And I think that like that could very realistically happen in a relatively short amount of time. And then that's after that would be a 3x, and then we get to Van Eck's $3 million point, but that's 2050, which is 26 years away. And I'm saying we could potentially reach gold's market cap like very, very quickly, 18 months, if the bull market plays out like it has historically. As far as like how high Bitcoin can go, it is kind of hard to explain. The one way that I would think about it, and I've tried to like change people's perspective, is like people create this like diversified portfolio full of all these different asset classes, and they all think that they're doing pretty well. Like they see their S&P 500, it's going up 10% per year in terms of dollars. They see their gold, their real estate, whatnot. They see all these different assets, and they're like, you know what? Like my wealth is going up. Like it's going pretty well. And it's like, that's not really necessarily what's happening, right? Like if you go to Venezuela and you hold Venezuelan stocks, or you denominate the S&P 500 in Venezuelan bolivars, like, yes, your assets look great. You can buy like anything, and the asset that you're holding, denominated in Venezuelan bolivars, looks like it's a fantastic investment because it's going straight up. And so I think people are eventually going to recognize that, wait a second, like the dollar has historically been a fairly useful unit of account. It still in the short term kind of is, but in the long term, it's not really that useful. Like it's designed to debase against basic consumer goods. And these basic consumer goods are getting more abundant and more plentiful and easier to buy. Yet the prices of these consumer goods are going up because that's by design. Like the dollar's basically pegged to a basket of consumer goods, and it's supposed to debase against that basket of consumer goods by 2% per year. So I think part of it is like helping people shift their mindset away from using the dollar as a long-term unit of account, and recognizing that there might be a better unit of account for long-term wealth out there. And then once you kind of taken that step, you're like, wait a second, I bought this house many years ago for 100 Bitcoin, and now it's worth, 7 Bitcoin or whatever it might be today. Like that's a pretty extreme loss of purchasing power that you could have had if you had just, bought actual Bitcoin. And so then it will like kind of recalibrate everyone's brain in the sense that, wait, this is kind of wrong. Like I'm spreading all of my wealth across so many different, eggs and different baskets. In reality, like all of these baskets and eggs are like decreasing in value over time, denominated in an actual more superior form of money. And I think more and more people are eventually going to do that, especially as, we see another bull market come around. And then it's going to be somewhat of a panic, honestly, I guess, because people are going to be like, wow, like I'm losing wealth. Like my wealth is literally melting away, and I have to get a Bitcoin allocation to like kind of lock in what I still have. And that's how, like, that's going to be the best way to preserve and grow wealth into the future. And as technology gets more advanced and humanity gets more advanced, then we'll continue to see natural technology deflation denominated in Bitcoin. And so everything's going to become more abundant. Price of Bitcoin is going to keep going up. And I think like over time, as like that big pie of $900 trillion of all these different asset classes, one will probably keep growing in dollar terms over time, because that's by design. Like the system needs these assets to continue going up in dollar terms, but a lot of that is going to continue to kind of get sucked into the Bitcoin market. And Bitcoin is just going to become an increasing percentage of total global wealth, all at the same time when total global wealth is going to continue expanding as it has in dollar terms, for the last 100 plus years. And so, I didn't really answer your question, like what the long-term price of Bitcoin could be, but I think it's going to be pretty massive once you just realize it's kind of like Saylor's Bitcoin 24 model, where I think it was Bitcoin 24 model, where he's basically saying like total wealth is going to keep growing. Like if you're just, optimistic about the future and you assume that the dollar is going to continue to get debased against a basket of consumer goods, and Bitcoin is just going to become an increasing percentage within that total wealth. And obviously it could become a massive percentage once you realize that all of these other assets are stuff that we can just create with additional technology, additional energy, additional, human progress. And Bitcoin just inevitably has to become a larger and larger percentage of the total pie.
Any thoughts? I'm sure you do, but I'd love to hear your thoughts on the ECB and I think it was the Minnesota Fed, correct me if I'm wrong, but coming out and really attacking Bitcoin, probably one of the most brazen attacks on Bitcoin over the last week or so. I would love to hear your thoughts on what's been going down in the global central bank world. If you want the answer to that question right there and you like that spicy clip, check it out here. Come on, we'll see you in there. But if you want the full interview in its entirety, all the spicy clips put together, and you're not going to want to miss it, believe me, then check that out here. Come on, we'll see you in there. Do it.